Hello friends, in the current video we will work out the ratio analysis problem. The continuation of previous video we will do here, right? In the previous video we we have to do the last one, right? So opening inventory, the same sum, we need to calculate working capital turnover ratio, right? So the formula for working capital turnover ratio is capital turnover ratio. So working capital turnover ratio is equals to, the formula is net sales or cost of goods sold divided by net working capital or working capital. This is the formula, right? So in the previous question, so working capital is already given 40,000, right? And net sales we have given 80,000. So apply the formula, 80,000 divided by 40,000 is the working capital is equals to 2. The ratio will be calculated generally in times. So the answer is 2 times, right? So we'll proceed with the next question. Question number 139. So in this question, from the following, calculate current ratio, working capital turnover ratio again. And this question was asked All India 2014 paper, right, in CBSE 12th class. So we have information revenue from operation, we have total assets. Always bear in mind, total asset would be equals to total liabilities even. Then we have shareholders fund 60,000. Then we have non-current liabilities, then non-current assets, right? So first, what we need to calculate, question number 139. So we need to calculate current ratio. So formula of current ratio is CA by CL. So CA, how much is CA? See, bear in mind, always you must understand, here we have missing information. We did not provide in the question the current assets, whereas current liabilities even. So how to calculate? So total assets are 1 lakh minus non-current assets 50,000. So we will get current assets, correct, right? So total assets minus non-current assets. So total assets comes to 1 lakh, whereas non-current assets are 50,000, is equals to 50,000 is our current assets, right? Once we calculate current assets, the next we need to calculate current liabilities. How to calculate current liabilities? Again, total assets, as I told you, can be considered as a total liabilities, right? So we have current liabilities is equals to total liabilities minus shareholders fund plus non-current liabilities. So total liabilities can be taken total assets, that is 1 lakh minus shareholders fund given in the question is how much? Shareholders fund is 60,000 and non-current liabilities are 20,000. So minus 60,000 plus 20,000 is equals to 80,000. Then 1 lakh minus 80,000, that is equals to 20,000 is our current liabilities, right? Then apply the formula. Current assets are 50,000 divided by current liabilities are 20,000, that is equals to 2.5. 2.5 is to 1 even, right? So this is the way. Next is working capital turnover ratio. So what is the formula? Just now we have written working capital turnover ratio formula. This is question number 139 we are doing. Right, then working capital turnover ratio is equals to working capital and cost of, see, so basically try to remember that here I have written the formula working capital. Net sales are cost of goods sold. In the absence of net sales, we can take cost of goods sold even as our numerator, right? So in this case, we have given revenue from operation, that is 1,50,000. Then working capital. So revenue from operation is 1,50,000. We can take sales. Then working capital is equals to CA minus CL. So CA is 50,000, whereas CL is 20,000. Therefore, working capital is equals to 30,000. So 30,000. If you simplify this equation, we'll get 5 times answer. Right? Clear? So we have done, this is the most important question which was asked in the earlier board exam. Now see the second question. I'm doing a little bit fast, right? You're already aware of the formulas. In my earlier videos, I have explained the formulas even. Question number 140. Calculate gross profit, current ratio, asset test ratio, and inventory turnover ratio. The information is gross profit, inventory, cash and cash equivalents, revenue from operation, trade receivables, current liabilities. Right? So first is gross profit ratio. So directly apply the formula. Question number 140. Gross profit ratio is equals to GP by net sales into 100. So directly question में GP is given. Our gross profit is 50,000 divided by net sales are 1 lakh into 100 is equals to 50% is our gross profit ratio. Then is current ratio, CR, that is equals to CA by CL, current ratio. So how to calculate current ratio? CA by CL. So in this question, current assets comes to cash inventory, cash and cash equivalents, and trade receivables comes under current assets. Then current liabilities would be 40,000. Therefore, CA is equals to inventory is 15,000. Then inventory is 15,000. Then cash and cash equivalents 17,500 plus trade receivables 27,500. Make the summation. So if you make the summation, that is 15,000 plus 17,500 plus 27,500 is equals to 60,000. So our current assets are 60,000 here. Then current liabilities directly given in the question, that is 40,000. So divided by 40,000, that is 1.5 is our current ratio. And the next ratio is quick ratio or acid test ratio. Right? Quick ratio, quick assets by current liabilities. Then quick assets is equals to current assets minus stock plus prepaid expenses. So in this question, we have given current assets are just now we calculated, that is 60,000, minus we have to deduct the stock inventory. Inventory is how much? In this question, 15,000. So we don't have any prepaid expenses. Therefore 45,000 is our quick assets. So apply the formula 45,000 divided by current liabilities. Already we have calculated, that is 40,000. So 45,000 divided by 40 is equals to 1.125 is our answer. So till now we have calculated 3 ratios, and the final one I'll calculate here. Right, what is the last one? Inventory turnover ratio. Stock turnover ratio or inventory turnover ratio formula, COGS divided by average stock. So cost of goods sold. Right, how to calculate cost of goods sold in this question? We have given COGS is equals to formula sales minus GP. So sales are our given in the question, that is 1 lakh, minus GP is 50,000. Therefore COGS even will be 50,000. Then average stock. In this case, we have not provided any opening stock. Therefore, closing stock, that is inventory, is said is average stock. Therefore, the answer would be COGS is 50,000 divided by 15,000 is the average inventory. In the absence of information, we can take closing stock itself as our average stock. Therefore, 50,000 divided by 15,000 will get 3.33 bar, right? So this is our inventory turnover ratio, right? So we have done with question number 140. Then we'll proceed to the question number 141. Calculate the following ratios, right? We asked to calculate current ratio, asset test ratio, operating ratio, and gross profit ratio, right? So current ratio, we have given current assets and current liabilities, right? So I'll show you here itself, right? Then inventory we have given, then revenue from operations, sales, operating expenses, then cost of goods sold, right? So very quickly and fast we'll work out, so consuming less time, right? Now based on the information, question number 141. So we are asked to calculate current ratio, right? So in this question 141, we have directly provided information of current assets 70, current liabilities 35. So current ratio is 2. So CR is equals to CA by CL. Please bear in mind, always I am writing the formulas, right? You even write the formulas always while practicing the problems, because it will give you a lot of what we call strength, whereby you can easily remember the formula. No need to by heart the formulas, right? So CA are 70,000, or CL are 35,000. Therefore current ratio is 2. Next is what? Asset test ratio or quick ratio. Asset test or quick ratio, one and only same. Quick assets by current liabilities. Therefore quick assets is equals to current assets minus stock plus prepaid expenses. So in this case we have not given prepaid expenses, therefore we will deduct stock. So 70,000 minus stock is 30,000 in the question. So 40,000 is our quick assets. Therefore 40,000 divided by 35,000. So 40,000 divided by 35,000 will get 1.143 is the answer, right? Next, after asset, operating ratio. Operating cost divided by net sales into 100. Therefore here operating cost is equals to operating expenses plus COGS, cost of goods sold. So operating expenses is directly given in the question, right? So in this question we have given cost of goods sold 60,000 and operating expenses is 40,000. Therefore operating 40 plus 60 is equals to 1 lakh is our operating expenses. So apply the formula here itself. 1 lakh is our operating cost divided by net sales is already given in the question. That is 1,20,000 into 100. So simplify the equation. That is 1 lakh divided by 1,20,000 into 100. That is 83.33%. Right? Once operating ratio is done, gross profit ratio, very simple. GP ratio formula, GP by net sales into 100. So gross profit is equals to, how to calculate GP here? Gross profit is equals to C. We have given sales and we have given COGS. So GP is equals to sales minus COGS. Sales is 1,20,000, sorry. 1,20,000, COGS is 1 lakh. Sorry, COGS is 60,000. Sorry. Therefore, our what we call GP is 60,000. So 60,000 divided by net sales are again 1,20,000. Right? GP by net sales into 100 is equals to 50% is our gross profit ratio. Right? So like this we have calculated all the 4, that is current ratio, asset test ratio, then we calculate operating ratio, then gross profit ratio. Clear? Then we'll proceed with the next question. So in the next question, what we are asked to calculate from the following information given below, calculate any 3 of the following. In the sense we take everything, all the ratios. We calculate gross profit ratio, working capital turnover, debt equity, and proprietary ratio is equals to shareholders fund divided by total assets. Right? The formula is shareholders fund by total assets. So we will calculate this. So the information we have, revenue from operation, that is 50,000, 5 lakhs. COGS is 3 lakhs. Current assets is 2 lakhs. Current liabilities 1,40,000. Paid up capital is 2,40,000. 13% debentures is 1 lakh. Right? So with the help of this information, we need to calculate first which ratio. The first ratio we need to calculate is gross profit ratio. Right? So question number 142. Right? So gross profit ratio. GP ratio is equals to GP by net sales into 100. So here GP is equals to net sales minus COGS. So net sales is given in the question, that is 5 lakhs. Revenue from operations and net sales is one only same, minus COGS, cost of revenue from operation is 3 lakhs. Therefore 2 lakhs is our gross profit. So apply the formula. Gross profit is 2 lakhs divided by net sales is 5 lakhs into 100, that is equals to 2 divided by 5 into 100, that is equals to 40% is our answer. So gross profit ratio we calculated, that is 40%. And the next ratio is working capital turnover ratio. The formula is net sales divided by working capital. So net sales is given in the question, that is 5 lakhs. Now we need to know working capital. How to calculate working capital? Working capital is equals to current assets minus current liabilities. Current assets are 2 lakhs minus 1 lakh 40, that is equals to 60,000. So 60,000 is working capital. So 5 lakhs divided by 60,000 is equals to 8.33 bar, right? So our working capital turnover ratio is 8.33. Next, after working capital ratio, debt equity ratio. Long term debts divided by shareholders fund. So in this question, what is the long term debt? That is 13% debenture, 1 lakh is the long term debts. Shareholders fund is equals to, how to calculate shareholders fund? That is share capital is directly given to us. So share capital can be taken as shareholders fund, 2,50,000 is equals to, that is 1 lakh divided by 2,50,000 is equals to 0.4, right? 0.4 is to 1 even, we can say. Then next one is proprietary ratio, right? Next one is proprietary ratio. What is the formula of proprietary ratio? Shareholders fund divided by total assets, right? Clear? So right, shareholders fund. Shareholders fund is paid up capital. We can take shareholders fund, that is right, proprietary ratio, right? Shareholders fund by total assets. So shareholders fund directly is given, that is the paid up capital 2,50,000 is the shareholders fund divided by total assets. How to calculate total assets? In this case, the summation of liabilities will be, the total liabilities is equals to total assets. Therefore, this part, these three items belongs to liabilities part. So summation of all these three items will be the total assets, right? So when you make the summation of current liabilities, paid up capital and debenture, these three liabilities will be equals to liabilities and liabilities equals to total assets. Therefore, 1,40,000 plus 2,50,000 plus 1 lakh. So that is equals to 4,90,000. So 2,50,000 divided by 490 is equals to 0.51 is to 1. So like this, we need to calculate our proprietary ratio is equals to shareholders fund divided by total assets. Shareholders fund is equals to equity share capital, preference share capital plus reserves and surplus. All those items comes under shareholders fund. Then total assets, we need to take all assets minus any fictitious assets we have, we need to deduct it. So like this, we need to calculate the proprietary ratio, right? Once proprietary ratio is done, the next question, what it says, on the basis of the following information, calculate debt equity ratio and working capital turnover ratio, right? Formula of debt equity ratio is equals to long term debts divided by shareholders fund. So what is our long term debts here? Long term debts are debentures and 9% loan, right? So the make the summation of debentures plus 9% loan comes to 10 lakhs, right? Divided by shareholders fund. Shareholders fund is equals to share capital plus debenture redemption reserve. This 2 comes under the what we call shareholders fund, right? So very quick we will do this sum, right? So debt equity ratio formula, debt equity ratio, long term debts divided by shareholders fund. So long term debts are, as we have already calculated, the 3 lakhs plus 7 lakhs. So long term debts are 10 lakhs. Then shareholders fund is equals to, as I have already explained, equity share capital 7 lakh, paid up capital plus debenture redemption reserve DRR. So that comes to 20 lakhs. That is equals to 0.5:1 is our debt equity ratio. Then working capital turnover ratio. So for working capital turnover ratio, we require net sales divided by working capital. So revenue from operations, sales are 40, cash plus credit 60 lakhs is our what we call sales. Then we need to have working capital. For working capital, we have current assets and current liabilities. 8 lakhs current assets minus current liabilities 4 lakhs is working capital is 4 lakhs. So therefore the answer is 60 lakhs divided by 4 lakhs. 4 lakhs is current assets minus current liabilities, CA minus CL. Right. Then 60 lakhs divided by 4 lakhs, that is equals to 15. Right. So our working capital turnover ratio is 60 lakhs divided by, see, bear in mind we were making slight mistake here. See, it is other current assets is 8 lakhs and we have provided even inventory 1 lakh. So our total current assets CA is equals to 9 lakhs minus current liabilities 4 lakhs is equals to 5 lakhs is working capital. Working capital is 5 lakhs. Therefore, we will replace this 4 with 5. Then it is 12 times. Answer is right. So this is other current assets. We must be very careful with the information. These are other current assets. Then closing inventory even will be a part of current asset. Therefore, total 8 plus 1 9 lakhs minus 4 lakhs will get working capital. Right. So next question. Very quickly we'll proceed. We need to conclude this. From the following, calculate debt equity ratio, total asset to debt ratio and proprietary ratio. Debt equity ratio divided by long term debts divided by shareholders fund. So the long term debts in the question are equity share capital, preferential capital, reserve, balance in statement of profit and debentures, trade payable and outstanding liabilities. So debentures 75,000 is our long term debts, and the shareholders fund comes to equity share capital, preferential capital, reserves and balance in P&L. All this collectively comes under shareholders fund. Therefore the answer here itself 75,000 divided by this all, that is 75 equity share capital plus 25 plus 45 plus 30. So 175. Easily you can calculate. So 75,000 divided by 175 is equals to 0.42, right, or 0.43 we can say. We'll get directly the answer. Clear? Next is total asset to debt ratio, right? Total asset, right? How to calculate total assets? In this question, total assets is equals to, how to calculate? We have given liabilities past, question number this question number is 144. So total assets is equals to the summation of these liabilities, all the shareholders fund, total assets to debt ratio. So calculate this summation. Shareholders fund, we got how much? 1,75,000 plus debentures 75,000. So 1,75,000 plus 75,000 is equals to 2,50,000 is our total assets. Total assets is 2,50,000. Then debts is 75,000. So total assets is equals to, formula is, we can write the formula, total assets divided by long term debt. 2,50,000 divided by 75,000. Sorry, total debt, total assets here. Sorry, we forgot to take these two items. That is, trade payables and outstanding expenses is also part of a liability, right? Therefore, 40 plus 10, 50,000. So that is 3 lakhs. Totals, what is the formula is given? Total assets to debt ratio. So total asset to debt, that is 3 lakh by 75,000 is equals to 4. The answer is 4. Alright. Then proprietary ratio, shareholders fund by total assets. Total assets already we have calculated 3 lakhs. Right. Next, proprietary ratio. So proprietary ratio is equals to shareholders fund by total assets. So shareholders fund already we have calculated here. Shareholders fund is 75, 25 preference, general and balance in P&L, right? So that is equals to, so shareholders fund is how much we have calculated in the earlier formula. That is 1,75,000 shareholders fund. Just now we calculated here, you see, 1,75,000 divided by total assets is 3 lakhs we calculated just now. Is equals to 175 divided by 3 lakhs is equals to 0.58 or 58% even if we want to calculate it percentage, right? Then the next is, on the following information you need related to the Naveen, calculate return on investment and total assets to debt ratio, right? So right, we'll do this sums return on investment in another video, right? So hope you understood this, and please subscribe my channel and motivate me to make more videos. Thank you very much.